America's ability to pay its debt, I think, is becoming a concern for the nations around the globe. Those foreign nations own almost $8 trillion worth of our treasuries, and I think they're getting nervous and maybe they don't trust us anymore. So when you say that this movement is different, well, it's different to me in two ways. The biggest is that, at least in terms of gold, it's blown through all resistance. There's nothing above it. It's never been this high. Where does it stop? And should it actually have been much higher to begin with? I don't know. And I do think it will drag silver around. It will pull it with it. Typically, as people have talked about forever, gold goes first, silver goes further in terms of a percentage gain. But in my heart of hearts, I believe what we are seeing is a lack of trust that is manifesting itself in higher commodity prices, in particular gold right now.
Gold and silver prices have surged and are approaching their daily highs as Wednesday reaches midday. Gold prices rebounded from the $2,150 support level after experiencing a bearish correction following a robust rally that saw it reach a fresh all-time high of $2,195 on Friday. The bullish near-term technical outlook and positive external market factors are fostering buying interest in both precious metals today. According to Schectman's insights, the current movement in commodity prices, particularly gold, reflects a prevailing lack of trust in the financial system. Schectman speculates that central banks actively acquire gold to hedge against these perceived risks, contributing to the upward momentum in gold prices. As the World Gold Council states, gold has the opportunity to demonstrate its value as a stabilizing force in the global economy against the backdrop of anticipated macroeconomic and geopolitical uncertainties in 2024. Official data reveals that China's gold reserves have continued to climb for 16 consecutive months, with a noteworthy addition of 12 tons in February alone, bringing the total to 2,257 tons, representing 4.3% of the country's foreign exchange reserves. The People's Bank of China has announced a 12-ton increase in gold holdings for February, extending its streak of gold acquisitions to 16 months and boosting the total reserves to 2,257 tons. China's gold reserves have seen a net increase of 22 tons thus far in 2024. With the People's Bank of China reporting a total of 309 tons in gold purchases over the past 16 months. Schectman highlights a potential shift among traditional buyers of U.S. debt towards tangible assets such as gold, silver, copper, zinc, and lead. This shift suggests a growing apprehension regarding the stability of government bonds, further underlining the perceived value and reliability of precious metals. Join us as we explore the insights shared by AndySchectman. Stay updated by subscribing to our channel and activating notifications. Thank you.
This system that we have is one that is based upon trust. I think there is a strong probability that a lot of what's happening to the bond market, to the debt market, is a function of lack of trust. And I think the most important thing to keep in mind is that you need somebody to buy the bonds in order to continue to finance the debt. And this is all centered around interest rates, right? I mean, and the question really is, who can we count on right now to buy our debt? And the countries that predominantly have been buying our debt, I believe, have shifted into buying tangible assets. Not just gold and silver, but copper, zinc, lead, you name it. Anything that you would need to build an infrastructure, I believe that's what they are doing. And when you look at the performance of gold over the last 25 years, it has outpaced that of the bond market tremendously. It's outpaced the S&P. We've talked about this before, but what it does, look, America's ability to pay its debt, I think, is becoming a concern for the nations around the globe. And, right now, those foreign nations own almost $8 trillion worth of our treasuries. And I think they're getting nervous and maybe they don't trust us anymore. So when you say that this movement is different, well, it's different to me in two ways. The biggest is that, at least in terms of gold, it's blown through all resistance. There's nothing above it. It's never been this high. Where does it stop? And should it actually have been much higher to begin with? I don't know. And I do think it will drag silver with it. It will pull it with it. Typically, as people have talked about forever, gold goes first, silver goes further in terms of a percentage gain. But in my heart of hearts, I believe what we are seeing is a lack of trust that is manifesting itself in higher commodity prices, in particular gold right now. because I think these central banks around the world view gold as a safer bet, one that doesn't have sanction and confiscation risk, doesn't have default risk. It doesn't have any of these risks associated with the government, who has proven that they have no problem in cutting people off or cutting countries off from the system if they don't align ideologically with the way that we do. So I think that's why it feels different this time. This is central bank buying to me, and big central bank buying that, you can only manipulate a market by pushing it in the direction that it is going. And to try to hold this back, I think is as dumb as a mud wall. And you'll end up seeing companies that will try and could very well likely end up in the dust heap, history's dust heap of those that tried and failed. So not a smart time to be shorting this market in this environment, in this world, I guess is all I'm trying to say. Massive outflows out of these massive gold and silver trusts, and the price continue to rise. It's very bullish. When you see gold rising in the face of positive real interest rates, it's very bullish. And I just think that just maybe that this strength that we see in gold is a lot more powerful than the cartel's ability to suppress it, and the dangers associated with messing with something that has a global demand. It's one thing when no one is accumulating it. It's easy to suppress the price with levered futures contracts, but when you knock down the price, especially if it's naked, and you have half of the world standing for delivery saying thank you very much, it's very, very dangerous.
It's becoming increasingly evident that gold is staging a significant resurgence, despite attempts to suppress its price through manipulation in the futures market. This manipulation involves selling paper gold contracts that lack physical backing, aiming to drive down gold prices to bolster the strength of the US dollar. While a low gold price may support a robust dollar, other nations can acquire gold at suppressed prices. Despite facing their own challenges, these countries have been vocal in signaling a departure from the era of relentless money printing. For instance, China's decision to halt investments in U.S. debt, such as buying U.S. treasuries, sends a clear message to the Western world about the unsustainable nature of their economic model. This model relies on continuous currency printing to service escalating debt interest payments, let alone the principal. Schectman warns that persisting in suppressing metal prices will only worsen the situation, potentially leading to a reckoning where the current economic system is replaced by one more grounded in reality and aligned with the interests of nations involved in commodity production and consumption. Let's get back to the interview.
What you are going to see, in my opinion, is the foolishness by the West, who continues to suppress the price of metals for their own greed and stupidity. Maybe they're being told to do it to support the bond market, to support the dollar, to support this stupid illusion that the dollar or the emperor is actually clothed when we know he's not. But I think what is going to happen is they will use that against us, as I've been very consistent in saying. They're using this suppression against us by bleeding dry the exchanges, but they are preparing. And this is the Russian finance minister totally knows it. They all know it. And that is that the Western price setting mechanism, the Western COMEX prices, are a bunch of crap. And they're going to use it against us until no one is foolish enough, i.e. the brain dead money managers, to do this, to take the other side. And when there is no one offering metal or commodities at the Western price any longer, you will see a shift, whether it be to Moscow, whether it be to the Shanghai Gold Exchange or to Dubai, and it's coming. So this back and forth folly of rinse, wash, and repeat, where the brain dead money managers continue to fall for this same sucker game, where the commercials suck them into speculation, then smack the price down as the price rises, will end poorly. Until it does, frustrating as hell. But when you got the Russian finance minister openly saying, we see what they're doing and we're going to change that, it's going to happen. And I don't know if it's this rally or the next, but each time that they continue to suppress the price in what is a immoral fashion and one that is messing with Mother Nature, it's only going to exacerbate the final outcome, Chris. And I mean that, brother. I truly do. Right now, we're playing right into their hand. Let's suppress the price, and so they can gobble up every ounce across the globe on any exchange that's dumb enough to sell it. And when that day ends, when no one's going to sell it for that make-believe price, just like that, you're going to see another system, another exchange, another country take over for what the COMEX was exposed to being, and that is fraudulent. And I think, yeah, maybe we will see another rinse, wash, and repeat where this rally, which seems so strong and substantive, is actually smoke and mirrors, one that was fostered by the commercial banks. I guess we'll have to see. But if I were a commercial bank or a board member, I'd say, what the hell are you guys doing? You are playing with really, really dangerous fire. And maybe they should go back and listen to your interview with Bart Chilton talking about the fate of Bear Stearns when they did the same stupid thing. So anyways, I digress. I don't know what tomorrow or next week will bring, but I can tell you we're getting much, much closer to the COMEX and the Western price setting system, I think, being exchanged for one that is more realistic to the countries who appreciate, understand, produce, and consume the commodities that we're valuing, that they're accumulating.
How might the surge in gold and silver prices impact investment strategies and asset allocation decisions in the coming months, particularly in light of the perceived lack of trust in the financial system? Share your thoughts in the comment section. If the video resonates with you, join our community by subscribing to our channel and enabling notifications with the bell icon. Thank you for being a part of our community.